Hello and welcome to the channel. Today we'll take a look at the gold market. Before we proceed further, this video is for educational purposes only and not a financial advice. As we looked at in our previous video, we were getting bullish on gold because of the seasonal and the day before the Christmas holidays, gold has a bullish bias. And what we had also noticed was that on 22nd December, actually gold closed above the 200-day moving average, which is this black line here. One of the reasons that we were actually getting positive on the gold was that it was going to stage some sort of a rally, was because of the support it found at the 1750 level, which is this 78.6% retracement of this low, and also the 61.8% retracement level from here. So that is a confluence level, and also the previous decline had been about this much, and we were right about in the vicinity as well of previous decline. So there were a number of things coming together. Now what we are watching for is a gold moving or taking this high out, which is around 1815. So if gold is able to just trade above this, ideally around 1820 level, that's very positive for the gold. So what we are watching for is the gold to go and test around 1850 area, so this region. And if the gold is able to close above 1850, especially let's say two consecutive closes, that's very positive action for gold. And we'll be looking at these highs of 1918 getting challenged, and perhaps even beyond that. But for now we'll just take it from one point to another. So this is what we are watching for gold. So we'll be watching this breakout of this gold, and we are targeting about 1850 level if that were to happen. Okay, let's take a look at some gold stocks. For example, GDX. Okay, so last time when we had a look at the GDX, we were actually looking for support around here in this level because of the region between 61.8% retracement and 78.6% retracement, but that did not hold. What it seems to have done is it actually gold formed a nice GDX formed a seemed to have formed a double bottom here, and with the gold commodities action getting positive, GDX should rally, but at the moment it's a little weaker than the gold itself. So the kind of thing we are looking for is what you can see is it's right at the 382 of this rally from this top here. In fact, it did that once, and the price rejected that. It went lower, so it's going above the second time. What is really important is that it takes this 3177 high out. That will be really good action, and I think then perhaps it can go and target 3370, where the 200-day moving average is, and also that's the 78.6% retracement level. Let's take a look at Newmont mining. So in our previous videos, when we took a look at the Newmont mining, it was in this rectangular formation, and quite similar to GDX. What it seems to have done is it seems to have formed a double bottom here. So what is important to note is in this rectangular formation, which is just a sideways price action, the price tried to take the bottom out, however closed above it, and the next day it was a positive action, then retested, and then what the price did was it took the all the sort of stops around here, then it went right into the box again, and we'll just have a quick look what's the retracement level. So it has already done a 38.2 retracement level from this low here. And yeah, what is positive for this stock will be a a good close to on 2 consecutive daily basis above this level, and particularly above this 200-day moving average, which is the black line. And that's where we also have the 38.2% retracement coming here. So with the if there is going to be a rally in gold with the strength of the underlying commodity, and with a good breakout out of this congestion or sideways move, particularly closing above the 60-70 level, this level on 2 daily consecutive basis, the stock would be quite positive. So this is what we are watching here. Let's take a look at the Barrick Gold. Okay, so compared to the Newmont Mining, Barrick Gold is different. It has a different kind of a pattern. It also appears to be weaker. Its pattern is quite similar to the GDX itself. So here what we'll be watching is, again, if it makes a move above this 1885 level, and then perhaps it will have a chance of going and testing the 200-day moving average around $20 level. And we just do a quick 38.2% retracement. Yeah, so that comes around the 2017, so anywhere between 2015 to 2050, that's the kind of region it can target. That will also be, I believe, the 78.6% retracement level. So yeah, this is what we'll be watching if it begins to close above this 1880 level. Let's also look at Polymetal. Yeah, it's a stock traded on London Stock Exchange. What we have seen is that what we're looking for, a support level that did not hold, so we'll remove that. Obviously it went below this level as well. Yeah, so with the strength in the underlying commodity, what we think is we'll have to watch how this stock will perform. Going above this 1320 level will be constructive, but what we can see is this stock is trading below 200-day moving average and also the 20-day moving average as well. So we'll have to watch how this stock will perform. But yeah, it does look a little bit weak at the moment. Let's also take a look at yeah, so these are the gold stocks which we are watching at the moment. So thank you very much for watching the video. As mentioned, in the gold, what we are looking for is perhaps it breaks out of this congestion zone, so trading into the 1820 level is pretty good. And then what we're watching is 1850, and if it begins to close above it on 2 closing consecutive basis, then that's very, very positive for the commodity. Thank you very much for watching the video. Good night and good trading. Bye.